So we've got some firsthand observations about what it means to be in an IRS audit. Frankly, these are very personal observations because I just recently completed a personal tax return for 2 years, 2021, 2022, that were selected to be audited by the IRS. And I thought it important to sort of share my observations and the things that I learned along the way that you probably need to know as well if you hope to avoid getting audited, or if you find yourself in an audit, to not have to ultimately write a big giant check. And so we thought that this conversation would be particularly useful as to how to help our clients and our radio listeners and our podcast listeners to make sure that if they're veering into troubled waters, or at least understanding what's necessary to substantiate a deduction. And as our regular listeners know, you know that at the office at Nelson Financial Planning, we actually do tax preparation work for our clients. And let's face it, nothing beats the accuracy of having investment advice while actually having a completed tax return at your disposal in order to make sure that your retirement is as tax efficient as possible. And certainly the practical real life experience of having gone through an IRS audit on a personal basis certainly has helped just this past tax season in the advice that we're giving to clients in terms of how to approach things. And I guess that's the reality of experience, right? Let's face it, 25 years ago when I started in this business, my advice was probably not as good or as the advice that I give today, because the advice that I give today is based on observing, experiencing, seeing, and working with hundreds and hundreds of people over the course of the past 25 years. So these I guess events or experiences certainly do help to give some direction on what you need to do in terms of your tax return. So welcome on into the program. This course is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. One of the longest running radio programs here in Central Florida, also a top 25 financial planning podcast. Go ahead and find us on whatever your favorite platform is, simply by going to our website, Nelson Financial Planning, where you'll get immediately connected over to our channels. While you're there, if you're interested in taking us up on our free offer of a current portfolio analysis that looks at where your hidden risks might be along with your costs, make sure you hit the contact us box and send us your name and phone number, and then we'd be more than happy to schedule an absolutely free conversation with you to do that in-depth analysis on where you are at today. My name, of course, is Joel Garris, certified financial planner, certified financial fiduciary at Nelson Financial Planning. So I begin this conversation about sort of the firsthand personal observations of an IRS audit with the experience of just having gone through that over the course of the past 3.5 months. It has now settled out. Started out, got the letter in mid-December, and so mid-April it was finalized. We had done kind of all of the exchange, if you will, and so about a 4-month process. And I think the first question anybody asks is, oh well, why would somebody be selected? And I think in my particular case, my personal tax return, there's a variety of things on it. I mean, there's if I think at the main schedules, I've got a Schedule A because I itemize my deductions still because of charitable giving. B, interest and dividends. C, self-employment. We've got some of that. And then Schedule D, dividends, capital gain, capital gains. E is investment property, rental property, ownership in businesses. I think the only one I don't have is F, because I don't have a farm. But obviously mine is a more complicated return. Both my wife and I, of course, run our respective organizations, so our income is decent as well, and a number of deductions involving business, charity, investment-related things like that. Yes, when I'm not doing the radio show, I do in fact run a business. So normal that I would have gotten selected, I guess, because they really do look at returns that are more complicated, because that's where you might find more things that might be awry on them. In terms of the agency itself, the Internal Revenue Service in the agency itself, I've got sort of three observations that sort of struck me as I was dealing with them. And the first one is that the increase in agents is that's real. That's not just a headline thing. That is real. And that became very clear to me when I went in for my initial interview. And so that's part of the process. You go in for an initial interview, and then you document exchange, and then you go in for a final sort of interview. So when I went in for my initial interview, I was greeted by one individual coming off the elevator, and then I walked into a room, and there were three people there, which is kind of intimidating because it was just me. But two of the three, it was pointed out, were new hires, were trainees, is how they were specifically described. And so think about that potential ratio. So in that room, in that conversation, there was one person that had a tremendous amount of experience with the IRS, been there for a number of years, and then two new trainees. So do the math. Let's be clear, the IRS clearly staffing up. So that was kind of the first observation of the agency itself. The second, and I think this is kind of gets not accurately observed in the media. Look, these are people. I mean, at the end of the day, these are reasonable people that are running a much tighter ship, is how I would basically, kind of describe it. The IRS agents, unlike, the police that pulls you over for, a speeding ticket, or a sheriff's deputy who stops you for, having a blinker out or something like that. I mean, they are human beings too, after all. So I guess I would say let's not overreact to who they are, right? I mean, yes, some can carry guns. I don't believe anybody had a gun in the course of my interview. But the reality is that if you're lying on your tax return, you go to jail. You can ask Wesley Snipes about that. He spent 3 years in prison as a result of his escapades on his tax return. So the third observation that I would make in general on the agency itself would be, and it kind of goes to that theme of just kind of running a much tighter ship. That I think became readily apparent, certainly in some conversations we had with a number of professionals during the period of time we were in the audit. Positioning, I guess, not as accommodating as in the past, right? So you could describe it as a bit of a sort of an all or nothing kind of approach. Like if you didn't really have very good records in this category of expense, then yeah, we're going to disallow the entire category of expense. And that's kind of a little different, where you might have gotten partial credit, if you will, on things in the past. They ain't giving out partial credit. And I guess that is representative of sort of the increase in enforcement. And I mean, obviously the need for that from a fundraising perspective is clear. I don't like the suggestion of, Americans are a bunch of tax cheats and liars and all of this, but the problem is that no political party wants to be accused of raising taxes. So how do you raise revenue without raising taxes? Well, the reality is that the tax code's pretty thick. And there's a lot of ways in which you can bring enforcement in different ways, where you're increasing the amount of tax revenue, but you're not having to necessarily raise taxes. So just some kind of observations about the process and the agency itself. We're going to take a break. When we come back, we're going to kind of touch upon probably the most important part of this conversation, which is, what are they looking for? Like, what was the stuff that I had to provide? What are they looking for in terms of substantiating the deductions that you take on your tax return? So we're going to have that when we return here on Dollars and Cents with Joel Garris of Nelson Financial Planning.